Hello everyone, this is Evan here from the Trade Risk on Wednesday, March 8th here with a midweek market recap video. We are first going to cover the current market environment, move into some of the other major markets, and then finish off the video looking at some individual sector analysis. Now I hope everybody's doing well. I hope you had a great day trading. Let's jump into the charts here. S&P 500, the SPY ETF, finished lower, down 0.17%, and that's pretty impressive given what oil did. And I know we're going to jump right into the action here, but oil down over 5%, I think close to 5.5% today, crude oil. And given that magnitude of a drop on a single day, it's pretty impressive to see that the S&P 500 could actually muster up just a small loss like we saw today. But before we get into oil and everything else, let's take a look at the S&P 500 a little closely. Actually, let's look at the weekly chart. Remember, we noted last week, or at least in our weekly newsletter, if you guys are on the list, we noted that this was the first time we didn't see a weekly close at the highs. And since then, we did pull off just a little bit. Now, that in itself is not necessarily a sell or tremendous worry signal, but it is just interesting to note is we've closed up near the highs or at the very highs for 5-6 consecutive weeks. We had one where we didn't get near the highs and then we pulled back off, and you can see we're starting to pull back. We're down about 77 basis points, about 1% off of the highs altogether. That's been the extent of this pullback so far, is about 1% off the highs. Now, if you take a look at where we are, we've had 5 days trading lower here. We technically had a flat day or a 15 cent up day right here, but we've been sideways to flat for about 5 days now, and we've successfully worked off those extreme overbought conditions. That pullback that everybody's been waiting for, wanting for, well, this is it. And I don't know if everybody's happy now that they have it, but we're experiencing that pullback in price. It hasn't been extreme. It's been very orderly. Look at the, just the way we've been drifting down here. So it's been kind of orderly selling. We're coming back into, I'd say 235. These lows from the end of February right here, about 235.50. That should be an interesting support level. That maybe is where we're kind of beelining for. You can see we're just about a point away from it. We did fill this gap in here from the big sort of exuberant bounce or gap higher and rally on last Wednesday. So we are, kind of coming back down to earth below the 8 period, coming close to, again, that 20 period is right underneath that 235.50 level. So this seems like a logical spot where the market may want to come back and test. And again, we do have some softness here. We've had weakness in market internals and market breadth. Certainly noticed the divergence in market breadth, at least members and I have been pointing that out and talking about it since back here last week is where we really saw some of those warning signs start to pick up in the short term. And it so far has progressed to, again, a very steady, orderly pullback. Now, we have been down sideways to flat 5 days in a row here. We are coming back to some prior kind of levels that we've traded at in here. I would expect, especially that we've been in such a strong trend, that dip buyers are going to become pretty interested in picking up some stock and some interest in here, given the 5-day slide off already. We do have the jobs number out Friday, and then the Fed rate hike decision next week. We've seen markets plenty of times in the past sell off into those events. The news headline, the worry, the next catalyst, right? Sell off into those events and then pop afterwards. Again, not saying that has to be the exact pattern. We could continue, we could accelerate lower. That can happen. But the point is we've seen markets kind of sell off into those fear events, realize the world's not ending, and then they see that pop, and the trend that is in place, which is to the upside, remains in place, and we continue higher. So we'll have to see how it all plays out. Again, jobs report Friday, maybe another day of softness, weakness tomorrow, test this support, and then we get some type of reactionary move higher off of it. Just thinking out loud, not trying to predict anything, just pointing out the levels and some of the catalysts we have on deck. If we go to the IWM, certainly some more weakness here. Very clear. If you go to the weekly chart, right, we blogged about this on on Monday, the first day of the week. Talked about this 138 sort of line in the sand here. We had a 3-week breakout above this 10-week consolidation. We went sideways. Last week we had this outside sort of reversal week, and we confirmed it lower fairly immediately on Monday of this week. If you guys remember, we were short last week into here, members and I, on this day here, this reversal day from the top end of the range, and we did cover the rest of our trade today. Unfortunately, not at the end of the day where we started to get this acceleration lower. It was closer to the beginning of the day, but we did cover the rest of our IWM short here, or TZA short. Again, I think this could clearly sort of capitulate further and really put some panic mode in if we start to dip more or accelerate lower tomorrow. But 5 days in a row down, I think it's, the easy short here has sort of been made in my eyes, and we'll need to see if there's some interest in here as we start to come back around this 135, 136 level. So IWM Russell continues to remain the weakest sector. Again, that weekly time frame, again, something that's very important. I think if you're more optimistic, or if you want to be aggressive or looking for exposure here, I think above 137, 138, that's the area where you really need to reclaim, and I think it's a very clear line in the sand. So if we can get back above there, I think all is well again, and we can perhaps start to rally in a more broad sense. But that's sort of the risk. That's sort of the level that we would really need to take out. Meanwhile, the Qs just remain completely resilient here. In fact, you can see the topping tails on just these past couple of days looking like the Qs have wanted to get going to the upside, but there's something else, that's just being held back by other sectors of the market that just aren't as strong here. So the Qs, really a tremendous amount of strength. Clearly, you can see momentum is, weakening. We're starting to flatten out in this trend. Ever since January, we've been, riding above the 8 period, and you can see we're still doing that. We're getting closes right on top of it now. So momentum weakening just a bit, but the trend here is still very strong in the Nasdaq. So that's sort of the layout here. Definitely the leaders. The laggards is the small caps, and then the S&P 500 you kind of have floating in between the two in the middle of them. So that's the landscape for the general market environment. Let's take a look at some other of the major markets. TLT continuing to break down here as it started to lose this trend line. We talked about that, discussed it. You can see it accelerated lower today. It did close at near the highs of the day, finding some support, it looks like, at least in the short term, around these December lows. But that weekly time frame, this thing looks ugly right here. So sellers in control on multiple time frames now in TLT. You better be cautious if you're trying to buy that dip. USO, let's just jump in there now. I mean, this is something we've talked about for about as long as January, the beginning of the year, really, in this tight range. We said, well, the real break is going to come with a expansion in range and a large volume day, and this is very significantly and very clearly it. So large volume pickup here, big expansion in range, down 5.25%. That's what happens when you've gone sideways in a pretty volatile, or at least in recent years has been a pretty volatile commodity. Crude oil here going sideways for so long in such tight overlapping pattern, you got this big expression of volatility here in a single day. Unfortunately, I am not in this. We just, before we blinked, this thing was down a good amount, and it's not something that I'm willing to chase right here at 5% down. But if we do get some reactionary move, I'd definitely take a consideration on it. The levels from late 2016, this bottom of this range here, they start to come in play if as long as we stay back below this 11.15 or so in the USO. And again, there's a lot of drift here in this ETF, so you do want to check the actual futures contract to see specifically where these coincides, what levels and this actually coincides with for crude oil. But pay attention to the lows here in December. That's something from a structural standpoint, weekly time frame. If this is a true breakdown, then this would be the area to pay attention to. So I'm watching USO, not involved in it, unfortunately, but something I'll be paying close attention to for the rest of this week. UNG, not too much else to say about it. I mean, it's finding some support down here. You could see some nice little uptick here in volume, especially on these days. So maybe some accumulation going on here. Not that interesting to me though, just the structure here. I'd like perhaps a retest of these lows, and if they hold, that would start to get my interest a little bit more. But UNG just not that exciting right now. If we go to GLD, the metals have been selling off. They are now below the February lows here, so they did sell off below this 116 level. This is another pivot low reference point right around 113. So GLD under some pressure, weekly chart. A little bit challenging to super like this chart here. I mean, it had this nice bounce up here from 105 to 120. Now we'll need to see, is it going to come back down and retrace half of it? You know, can the bulls put in a higher low here on the weekly time frame? So this will take a little bit of time to develop. I think more immediately on the daily chart, back above 116.50, that would be an interesting sort of overshot here, and then, you know, rejection, and then perhaps, you know, continuation higher. So I'd pay attention to 116.50 if we get back above there in short order. That might be something of interest. And silver has my interest a little bit more. This one, again, is unwinding here. It's been in a very steady, smooth uptrend, right? Taking the stairs up and then the elevator down. It's unwinding, you know, about a month's worth of action in about 1 week of trading here. So something to pay attention to. This area around 1620, these were prior highs. They acted as resistance for a few months. Let's see if they act as support back down here on the downside. So something also to pay attention to on the weekly time frame. So that wraps up the major markets. Let's take a look at some of the individual sectors. XLE, we'll start there. So completely hammered today. XLE was obviously on 5.5% drop in crude. We'll do that. I got a couple of different trend lines drawn here. I also put out a post this afternoon just detailing this general area coinciding with about a 10-month support level around this $70 to $69 one. This, again, a little bit of subjectivity drawn here on these trend lines. You guys can refine them. 50 cents lower, 50 cents higher. You know, you can draw it more precise on how you see it. But in general, this is a relative good guide of where we found support in the past. And we're now about 11% off of the highs here from December. So it's certainly had its meaningful sort of, hell, I mean, you could call it a little mini bear market here in energy, while the rest of the broad market has continued to all-time highs and you know, persisted in overbought conditions. So energy, still no love, but it's certainly a place that I'd be paying attention to right now. We actually have one name on in this sector. Remarkably, we had it coming into today, and it was still our biggest winner on the day. And yes, it's on the long side, so very peculiar. So XLE was the first sector there. XLV, this is sector of strength still. Healthcare, this is not a new story here. We've been talking about this for at least a week or so already. But XLV has been a monster, and it continues to just hold up near the highs. It was up almost 0.5% today. XLK, you know, what more to say? This is very similar to the Qs. NASDAQ 100 continues to just dominate here near highs, still closing above the 8-period EMA. It's pretty remarkable. And financials started off real strong. They were the upbeat sort of entry into today's session. They did sell off and close near the lows, but still holding up, you know, all things considered. Uptick in volume there today in the financials. If we look at the discretionary ETF, the XLY, some pretty healthy consolidation going on here. It doesn't look super ripe right now, at least not to, you know, maybe, you know, finding some support in here, but it's putting in some healthy consolidation. Could say the same thing for industrials, which continue to sell off today, but still holding up, testing that 20 period or in the process of it. So trying to hold up near those recent highs. I think IYR, something that's not so healthy. This is getting a little violent here on the unwind. IYT, little bit, you know, this is kind of crossing the line here. It really needs to try and hold up, or at least develop in perhaps all the way back down to this 161 level. Of course, XLE coming slamming down today. So those few sectors there are more on the harsher side of sort of the sell-off recently. So I think that's it, actually. I think we'll end it there. I hope you guys had a good week trading. If you like the videos, please do subscribe, bottom right-hand corner. Otherwise, thank you so much for watching, and I will talk to you again next time.